to the Gentle Ledger. Today is Friday, February 27th, 2026 in U.S. market time. Tonight felt like the market running its fingers along a wall and noticing the hairline fractures. Not panic, just information. Now, let's turn softly to the U.S. indexes. The S&P 500 fell 29.98 points, down 0.43% to 6,878.88. The Dow Jones Industrial Average dropped 521.28 points, down 1.05% to 48,977.92. The Nasdaq Composite slid 210.17 points, down 0.92% to 22,668.21, and the Russell 2000 fell 44.93 points, down 1.7% to 2,632.36. The day's tone was risk-off, with investors continuing to re-rate which companies might be winners in an AI-heavy future and which ones might quietly become optional. Now, gently into the corporate highlights, where the market's emotions showed up as percentages. In AI and semiconductors, Nvidia fell 4.2%, extending the prior day's drop even after solid earnings, an unmistakable sign that expectations lately have been heavier than results. In software, Zscaler plunged 12.2% after reporting a wider net loss, one of those moves that feels less like a decline and more like the market snapping a ruler in half. But not every tech headline was punished. Dell surged 21.9% after pointing to stronger expectations for its AI-optimized server business and promising more cash returns to shareholders. Today's clearest example of the market still rewarding the right kind of AI exposure. And in media, the tape turned dramatic. Netflix jumped 13.8% after stepping away from its pursuit of Warner Bros. Discovery, investors treating restraint as strategy. Warner Bros. Discovery fell 2.2% in the same storyline, and Paramount Skydance surged 20.8%. A move that read like the market cheering the winner of the deal narrative, regardless of the bruises involved. Then, one of the most psychologically modern moves of the day. Block rose 16.8% after announcing it would cut nearly half its workforce, saying AI tools could replace the work. An uncomfortable rally, but a rally all the same. Taken together, today's corporate highlights felt like a single message in many fonts. Efficiency is being rewarded. Uncertainty is being repriced. And AI is no longer a halo by default. Now, let's widen the lens to markets overseas. In Asia, Japan's Nikkei 225 rose about 0.2% to 58,877. Hong Kong's Hang Seng gained about 0.95% to 26,630.54. South Korea's Kospi slipped 1.00% to 6,244.13. In Europe, the Stoxx 600 edged up about 0.1%, closing out another strong month even as bank shares weakened on fresh credit fears. Now, in commodities and bonds, the market's nervous system spoke more clearly. Oil rose sharply on renewed worry about supply disruption tied to U.S.-Iran tensions. U.S. crude settled up 2.78% at $67.02, and Brent settled up 2.45% at $72.48. In treasuries, yields eased classic safety behavior. The U.S. 10-year yield fell 6.3 basis points to 3.96%, and precious metals stayed quietly powerful. Spot gold rose 1.5% to $5,263.59 an ounce, and spot silver rose 6.1% to $93.74. Finally, to crypto, where the mood followed risk assets lower. Bitcoin closed around $65,610, down about 2.78% on the day. Ethereum closed around $1,930, down about 4.77%. And so Friday closes not with a crash, but with a careful collective note-taking. A reminder that when a market is forced to imagine a different future, it doesn't always sell everything. It sells the stories it no longer trusts. Thank you for ending the week here. Rest gently and good night.